Well, it's time now for business. I'm joined by our business editor, Kate Moody. Hi there, Kate.
Hi, Tom.
Now, you're keeping a very close eye on the stock markets because, of course, the reaction to the news that governments, amongst them the French government, are going to impose new restrictions, it hasn't been met with too much of a warm welcome, shall we say, by investors.
No, investors or businesses, it has to be said, Tom. Stricter lockdowns on the horizon. Businesses and investors really bracing for the possible consequences. We saw the major European indices finishing their session sharply lower, down about 2.5% in London, 3 1/3 here in Paris, over 4 percentage points being lost in each Frankfurt and Milan. You can see those closing figures from just a few moments ago there. Wall Street is following suit. We're seeing losses of over 3% across the board. The Dow Jones sinking over 800 points this session. We had seen the Dow Jones with its worst session since early September earlier this week, and U.S. stocks seem to be heading for more losses. Well, French businesses will be watching closely to hear what new restrictions the French president announces later on. Inevitably, businesses will face either reduced hours or closure orders, depending on what the president announces. It's already causing alarm from business groups, with the head of France's biggest employers federation, MEDEF, warning of an economic collapse if a lockdown is imposed. While the head of the Small and Medium Business Association has warned that companies cannot afford to take on more debt. Camille Nedlek has more.
France's city centres could once again be deserted as the government is poised to announce a fresh wave of restrictions. The impact is already being felt. This rental agency bounced back from the first lockdown and was even preparing to expand, but not anymore.
Ça signifie que ce sont des engagements financiers, ce sont des recrutements, c'est de la formation. Que faire?
Companies across a number of sectors are struggling. This veranda factory saw sales drop by 1/4. And the French Council of Commerce is warning that closing shops in the run-up to Christmas would be disastrous, as it's when they make up to 60% of their annual sales. Another heavily hit sector is hospitality. Even before the second lockdown, 200,000 jobs were at risk. It could all add up to a very long and slow recovery.
Je pense aujourd'hui vraiment d'une façon très intime à tous ces indépendants, à tous ces entrepreneurs, à tous ces commerçants qui s'attendent à une sorte de coup près. C'est quoi? C'est-à-dire qu'ils se disent « mon seul horizon, c'est de déposer le bilan ». Et quand vous déposez le bilan et que vous êtes indépendant, vous n'avez plus rien. Il vous reste vos dettes et vous n'avez plus de revenus. Donc, comment fera-t-on demain pour relever notre pays si les entreprises sont moribondes?
At a meeting with the Prime Minister on Tuesday night, union leaders said more needed to be done to protect jobs and warned of hard times ahead.
Well, that's the situation for French businesses here. Let's go back to our top story and the concerns on the markets. We'll get some insight from Jasper Lawler, LCG's head of research in London. Jasper, thanks for joining us on France 24. Markets here in Europe really taking a beating this Wednesday as these stricter lockdown measures loom.
Good evening. Yes, it really is all about those lockdowns. Obviously, there's other things going on, the US election and the likes, but the fact that as an analyst or as an economist and the way you price assets in the market, it's all contingent on a certain economic scenario. And I think what most had baked into the cake was that actually we were on a steady recovery, a steady economic recovery that bottomed out. We had the worst of it in March. And since then, we've seen economic data improve. We've seen corporate earnings improve. And the idea was that it was going to be some form of recovery. There were arguments about different shapes, V's, W's, and K's. But the recovery was the main point. Now, all that's being thrown out the window, because if you do introduce a new lockdown, the result is going to be similar to that in March. And so what you look at is a double dip recession in the economy, and obviously markets are forward pricing mechanisms. We're probably going to see a double dip in the stock market if they foresee a double dip recession in the actual economy.
And the European Central Bank had also been painting a relatively optimistic picture of that recovery to come. They'll be holding a monetary policy meeting on Thursday. Are you expecting to hear a change of tone or perhaps even policy?
Well, the central bankers like to say that they don't react to short-term events, especially what's happening in the stock market. The stock market is reacting to an economic situation, a scenario that needs to be adjusted to. And so They have said before that they can lower interest rates to adjust to the economic scenario. They can increase the bond purchases they've done. I would think that this meeting, it's ill-timed for them. They would certainly like their market conditions to be better. I think they probably won't want to send out the message that they're ready to make interest rates higher or anything along those lines when there is this level of uncertainty out there.
All right, Jasper Lawler, that's all we've got time for at the moment. Jasper Lawler of LCG, thanks so much for joining us on France 24. And that's the business news for now. Tom, we'll be back later on.
Indeed. And we'll find out as well later on what those measures are here in France, and that'll at least alleviate some of the uncertainty out there in the markets. Thank you very much indeed, Kate Moody there, our business editor.